Yeah. Welcome, guys. Welcome, guys. Good morning, everyone. We'll start exactly 9:08. Okay. Let's give room for others to join us. Good morning. All right, guys. Good morning. Yeah, good morning, everyone. Good morning. Um, please kindly confirm if you can hear me. Drop one in the chat. If you can hear me, kindly drop one in the chat. Drop a one in the chat if you can hear me. Let's get started, please. All right, great, great. Thank you. All right. So let's get right into this. Good morning, everyone, once again, and welcome to T Billion Forex Academy. Okay, if you're new here, my name is Timothy, aka T Billion, and this is our weekly live market analysis and trading session. Okay, where we break down the forex market step by step in a very practical and well structured way. Okay, so we hold this session every Monday and Wednesday by 9:00 a.m. West African time, and our primary focus is XAUUSD gold. Okay, followed by other forex pairs you request in the chat. Now, the goal of these sessions is to shape and sharpen your understanding of the smart money concept, including order blocks, market structure, liquidity zones, and price action, and of course, how you can properly read market structure, identify key order block zones and liquidity areas, and most importantly, how you can apply them effectively in a real market conditions. Okay, so whether you're a newbie, an intermediate trader or a pro trader, stay with me, stay glued on this live session as we'll be following a clear top-down analysis process. All right, so thank you. Before we get started, or before we dive into today's market analysis, I would like us to do, a very quick market recap, right? I'd like us to do a very quick market recap. Let's look at what the market has been doing since our last session on Monday. Okay, so let's look at our chart, right? If you remember in our last session, right, we're able to identify a couple of zones, right? Now, over the course of when new price actions actually were printed on the charts, when new candles were printed on the chart, I, of course, made adjustments. I added more zones, and that is why you can see we have this. Shared some of the signals with my students on the private WhatsApp group, and a couple of us were able to, make a good amount of money from those setup, right? So let's do a quick recap on it. Okay, so from our last session, if you remember, we were able to mark out all of these zones, right? This, right? And let me zoom in. Okay, so let me take off all of this so we don't get distracted. All right. Okay, so into the 15 minutes chart, we have this. Okay, so let's look at what price did at our zones, right? Let's look at what price did at our zones. So first off, if you look at this zone, okay, let me zoom in. Let me zoom in so you see what price. All right. So if you look at what price did at our zone, at this zone, okay, if you look at it, price actually tapped into the zone, although we didn't take this trade, right? Price tapped into the zone, then gave this bullish move. This was the zone we were actually interested in. This zone, this other block zone here, this was the zone we were interested in, and that was the zone we marked out in our last session, right? Because we understood the concept of inducement, knowing fully well that this, of course, this whole move is an inducement, right? This whole move is an inducement. So technically, we would expect price to sweep available liquidity below this low. Okay, you can see how I, was able to mark out this, what's it called, this inducement zone using this dollar, you know, symbol, right? So this level, we expect markets to break below this low, tap into this rare, this extreme order block zone, right? Then give us a bullish move to the upside, either in continuation of the bullish trend or to the next supply zone, which will be this supply zone that I marked out here, this one, the one with the red what's it called, rectangle. Okay, so this is the next supply zone. So we would expect price to take sweep available liquidity below this low and tap into this zone, give us a bullish move to the to the upside to the next supply zone, which is this. Then you know like this from here, you know here, then go all the way down to the extreme order block zone, which is this. And if you look at it, well, price it exactly as we predicted, but it only tapped into our FVG zone. This, look at it. It tapped into over 50% of the FVG zone, near, got close to the order block itself, right? But it didn't touch the order block, you know. So before it's, reverses to the upside. Now, the moment we got this, of course, we're not tapped into this trade because it didn't touch our entry point. But then the moment it start printing order price action, right, we were able to identify new zones, which is this one here. Okay, and I dropped this setup on the group. Okay, and we took our entry. We took an entry here. I took this trade, right? I think a couple of my students too took this trade, and we're able to push the price or take the price, upward in a bullish run. And again, we were able to identify this zone, but unfortunately, I anticipated that price would, probably break this trend line that we have here, tap into this zone, then continue the bullish movement. But all through, price has been ranging, as you can see. It didn't give us a really good move as anticipated. But I think some of us were able to scalp all these nano order block zones, all these low probability order block zones, and we're able to scalp it and make some money off it, right? The private WhatsApp group is always active. You see chats, from different what's it called, student rolling in, following the setup of the VLAN. All right. So that is what happened basically. I think after the whole ranging, consolidation, the market broke out. I think as at yesterday, Trump gave a speech. That was what led to this massive, bullish run that we've been experiencing since yesterday. Although I didn't, catch any of this move because I wasn't really active on the charts between the space of yesterday. I was busy with some other stuff. So I missed this massive move. However, there is a point of entry here for us because this was the last resistance level or the last high we marked in our last session. So technically, when this high is broken, we should expect a retest of it before the continuation. But looking at the, impulsive movements, we have currently, um, well, I don't know how soon gold might retrace back to this level for a retest, so we can also join the bullish move. But then we are yet to identify new order block zones that the price has created in the course of this bullish run. So that is that with the analysis or the recap of our last trading session. Let's head to today's market analysis. Okay, I'm going to clear this whole chart so I can identify fresh zones and we take it up from there. So please, if you have any question regarding the recap, you can drop it in the chat. I'll definitely attend to the question. All right, so let's move on. Now, let's move to today's market analysis. You all know the process, right? We begin with our top-down analysis and process, starting from the daily time frame. You all know we trade just with well, probably better put, we run our top-down analysis process from the daily time frame down to the 5 minute time frame. Of course, from the daily time frame, that is where you know we determine our overall market trend or structure. Then we drill down further to the 15 minute time frame, and down even further to the 5 minute time frame to to refine the zone so that we get our entry at a sniper level, right? You don't want to in fact, as you want to what's it called, you want to eliminate potential drawback as much as you can, right? That is why you have to drill down to the lowest time frame, which in our case is the 5 minute time frame, which is also our entry time frame, to identify or to refine the order block zone further so that you get your entry at sniper, right? Okay, so let's start our top-down analysis process. We head to the daily time frame. We head to the daily time frame. We head to the daily time frame. So on a daily time frame, right? Let's mark on daily time frame. Let's identify the most recent break of structure or the most recent market shift. I hope you got that. We identify the most recent break of structure or the most recent market shift. Now, if you look at this, right, because we're on the daily time frame, which is a very higher time frame, is a higher time frame, right? I'm saying that this is a zone, this zone where price, reacted. This is a zone. Since I'm on the daily time frame, I'm going to mark this zone because by the time we drill down to a lower time frame, this would most likely be, you know, our POA, another block zone that we can, expect price to pull back to before it continues the bullish move. Okay, so I can also see another order block zone here, but again, these zones are really far away from this. These are extreme zones, and price has been bullish, so we are only interested in the most recent, what's it called, zone, and that is why I like to identify my most recent break of structure first, or the most recent market shift. So let's start with this, right? Then I'll drill down to the 4H time frame so I can identify other zones on the 4H time frame and also further refine the zone I have drawn on the daily time frame. So let's refine this zone further to this candle, right? You can see this candle, this very candle. Okay, so let's refine the zone to this. Okay, so this is our order block on the 4H time frame, right? Of course, this is our fair value gap. This is our fair value gap. This is our fair value gap or FVG. And sorry, let me bring this. This is supposed to be here. And then our FVG goes here like this. All right, so this is our FVG on the 4H time frame. And of course, this is our break of structure. This is our break of structure. All right, so we have this BOS. Okay, so let's drill down further to, yes, I have some other zones here too, but like I said, I'm only interested in the most recent. So at least I can get a trade opportunity. Let's drill down to 2H. Okay. Refine this zone further to this pivot candle here, this candle, this tiny candle here, right? Then adjust this a little bit to look more, pretty. And this, all right. Of course, we adjust this as well to look good. So, um, all right. Okay, so let's drill down further. I also have another zone here. This is this. This is my order block zone. This is my order block zone. I believe my screen is clear enough. Let me zoom in a little more. Okay, so we have this. Again, this is our FVG. This is our FVG. We have this. Sorry, FVG. Should be FVG. All right. So we have this, and we have this. And of course, this is our BOS, our break of structure. This to this. All right, so let's drill down further. Let's drill down further. Let's drill down further. Let's drill down further to the 1H time frame. Bring this a little bit closer. And this will be refined to this pivot candle here, this very candle. Look at the candle, this one here, this one. This candle, this particular candle, this red candle, this one. Can you see it? That looks like a cross. That's the candle we are refining to. Okay, so refine to this. Right, excuse me. All right, so we refine to this candle, this, good. Our FVG, we adjust it a little, okay, to fill the gap between the pivot candle, the candle after the momentum candle, and the candle after the momentum candle. Of course, you know, FVG is a three candle pattern, right? This candle, this red one here, then this momentum candle, the big one here, and this candle, the third one here. So the gap between this red candle and the candle after this big candle is what we call our FVG. Like I said in our previous session, I'll create a video, a YouTube shorts on the concepts of FVG and why markets respect it. You know, there's an institutional reason to that. You know, I'll create a video explaining that in details. Okay, but for now, just mark it the way I'm marking it. All right, so that is this. Okay, so again, we are going to drill down to 1H. We're going to drill down to 1H. Sorry, 30 minutes, right? So on this 30-minute time frame, we can further refine this zone to this pivot candle here, this candle, this one. Yes. So we refine to that candle. Then our FVG would be this and this. Don't forget, it's a three candle pattern. Let's see. Yeah, a three candle pattern. So it's going to be this, this, and this. The FVG is really tiny. Yeah, this one. Good. That'll be our FVG. Yeah, so this is our FVG. Yep, this. And this is where our FVG should be our FVG, this. Okay. And of course, this is our order block. Let's adjust it a little more. And this as well. All right, so that is that, and we have this guy. This is fine. There's this. Okay. All right. So I have another zone here. This. I have another zone here. This zone. This particular zone. This one. As a matter of fact, I have two zones there. This one. Okay. But the FVG there is really, really. Okay, there's no FVG there. But by the time we drill down to 15 minutes, there should. But if there is none, I'll take it off. Another zone I'm looking at is this. But again, it doesn't have an FVG. By the time we drill down to 15 minutes, sorry, to 5 minutes, which is our entry time frame, we are going to most likely find an FVG. And then if there's no FVG, of course, I'll take off the zone because FVG is a criteria for a valid order block zone. So please take note. These two on 30 minutes, on 30 minutes time frame, on the 30-minute time frame, there are currently no FVG on these two zones. I'll further refine to 15 and 5 minutes to identify an FVG. Otherwise, I'll take them off. Okay, the reason why I'm marking them is because of the consolidation the price made there before the breakouts, which usually often comes whenever you find a consolidation. We call it rally-based rally. I'm not going to go into that details, right? We call it rally-based rally. Let me just give you guys a quick heads up of that. Rally, base, rally base, rally base, rally, right? And we have what's it called? We have the concept of drop, base, drop, base, drop, right? Now, whenever gold or market in general, any pair gives you this kind of movement, oftentimes this is what happens. I hope we're together. This is a key concept. This is a key concept. Pay attention to it. I'm not going to break it down in details, but I think this should be enough for this. So when price goes back, oftentimes price goes back to retest the order block that led to this, consolidation, this accumulation phase, right? Price often goes back to test the order blocks before it continues in intended direction, right? So you always want to look out for an order block. Of course, a valid order block must have an FVG. But what's taking price back to that zone is the FVG. Price have to fill up that what's it called FVG, right? Again, I'll create a time to make a YouTube short, explain the core concept of FVG and why price, respects it a lot. So you want to mark the order block zone there, then wait for price to retest it, then ride the continuation of that, trend. Same thing applies to this pattern, right? Price would most often comes back to fill up the available FVG there, or retest the order block zone that is there before it continues in the intended direction. This is a core concept, right? So please take note about it. Call it rally-based rally and drop-based drop. All right, so let's take that off. It is based on this concept that I am identifying, probably that I'm marking out these zones in anticipation that in a lower time frame, like 15 minutes and 5 minutes, an FVG could be present, right? An FVG could be present. And like I mentioned, if no FVG is found, I'll take these both zones off. So please take note of that. Take note of that. Now let's drill down further to the 15-minute time frame. Okay. Now, on a 15-minute time frame, this can be drilled down further to this candle, and this, of course, remains with this candle. Still no FVG on these zones. And of course, these are BOS, or break of structure. And this is also a break of structure. So there's also a break of structure. This. So if we do not find an FVG there, please just know that this zone is a mere demand zone, not an order block zone. Okay. For a demand zone, this is a valid demand zone, a valid demand zone that you would expect price to still come back and react, at this zone. But again, we're not here to talk about demand and supply zone. We're here to speak or to talk about order blocks. Right. Okay. Again, I'm still looking out for that zone. This can be further refined to this candle. Just let's adjust this a little to this. We're good here. Leave it as it is. Okay, I found another zone here, which is a very fantastic, zone area for price, for potential price and what's it called reversal. Please take note. These are fantastic zones, very fantastic zones, clean zones, right? This FVG is present, FVG is present, FVG is present, FVG is present, FVG is present. Okay, so we have this, and let's mark it as FVG. All right, so good, 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 good. So we have this guy out of the way. Let me, minimize this a little. So we have this, and also minimize this guy a little. So we have this. You have to make your chart looks very pretty. Okay, so it has to look professional. So just keep it. This is fine. This is fine. So I don't like to add too many details to my charts. I like to keep my chart as clean as possible, right? I like to keep my chart as clean as possible. So on the 15-minute time frame, this is all I can see for now. Let's drill down to our entry time frame, which is the 5 minutes time frame, to further refine our zones. Okay, so let me push this a little bit, this a little bit to this point. Okay, looking at this, still there is no FVG here. So I'm going to take this guy out because it does not meet the criteria for me of a valid order block zone. Rather, oh, can you hear me? Can anyone hear me? Yeah, of course. Can you hear me? Please confirm if you can hear me. Yes, okay, good, 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 good. Okay, I think I've answered your question as to what FVG is, right? Okay, good, good. Thank you, thank you. All right, let's continue quickly so we can at least manage our time effectively. All right, so again, there is no FVG here for me, so I am not going to take this zone. I'm not going to take this zone, right? But then I can spot, another zone here on the 5 minute time frame, which is this guy right here. Okay, so this is something I would be interested in. This is something I am interested in, so I'm going to mark it out. This is my zone on the 5 minute time frame. Again, if you are taking trades at these zones, please don't be too optimistic with your take profits. Keep it lean, keep it very low. Like if I'm taking a trade right here, okay, let's continue. But this is our zone, and of course we have our FVG right here. Okay, very tiny FVG. FVG. Okay, so that is that. That is that. This has been tapped into, so I'm interested in this. For this also, there's no FVG. Okay, okay, there is. Yeah, good. We have an FVG for this guy. So this zone is a very valid zone, right? So we would expect price. You can see the FVG is, let me see if I can zoom in more so you can see this. This is it. So you can see there's an FVG here. So let's mark out the FVG. This, so this can do, right? A gap, this gap like this, FVG. All right, and of course, this is our other block. This is our, sorry, break of structure. Excuse me. This, right. Okay, so we have this, and we have this as well. We have this. So if you're taking this trade, please, your SL will be slightly below this, which may not be a good risk to reward ratio for you. So if you're taking this trade, just do a quick, scalp on it, because this is how your position should be, like this. This is where your SL should be, okay? And your risk to reward can be like this, okay? So risk to reward will be this high, this last high that market created, with the hope that market would, go up and take out the high, or probably just retest it before it continues in this bearish, move, which we are getting right now. Okay, so that is where you want to take this. Now for this, your entry would be, where you're on your other block zone, of course, this, and potentially you're targeting this. Again, your SL should be slightly, look at this, this is the low. Your SL should be slightly below this low, this swing level. This is where your SL should be. Please take note, not here, because there's high probability that price might, pierce into this zone, take out available liquidity, retest this very low here, this one, before it continues, right? Just with a wick, So your SL should be slightly below it, like so. That's it. Then, of course, you can. All right, so we have this. So look at what price is doing at the moment. So see, price has tapped, is about to tap into this other block zone. Let's look at it quickly. Okay, so it has tapped into this FVG, and you can see we are getting a quick rejection. If I drill down to 1 minute time frame to look at that zone properly, this is 1 minute, right? I'm not going to take this trade. I'm not going to take it because it's a low probability setup for me. If you're taking it, it's just a quick scalp. Upon the rejection, let's see what happens. Let's see. Okay, price has tapped into the zone. You see, price is still going deep down into the zone. So for me, this is a no for me. I'm not going to take this trade. Okay, now we are getting this bullish rejection. Getting this bullish rejection. So you can see this sharp rejection. The moment you get this rejection for a quick scalp, take the trade. Right? The moment you get this quick rejection for a quick scalp, you can take the trade, then you break even early because this zone is not a high probability zone. That rejection we get is an indication that buyers are present here, right? That sharp rejection. If you're on MT5, you would even see it more, clearly. It's to be a very quick rejection there. So that is an indication that buyers are interested, at that zone. And look at it. You can see after the rejection now, the next candle is bullish, right? But again, it's too quick. It's too early for me to make a decision to take this. But if you're taking this trade, like I said earlier, because of this rejection we are getting, it will be a quick buy. A quick buy. Let's see what price is doing. Let's look at it. Don't forget, this is where our SL is. Okay. This one is looking interesting for a quick scalp. Because of this rejection, I'm getting two, rejection candles forming here with two equal low. Look at it. Please pay attention to this. Two equal low. If I'm going to take this trade for a quick scalp, trust me, I'll enter for a buy, a quick one, like I said, because we are still expecting a massive pullback on gold. I know one soon gold is going to give a very massive retracement. Okay, so on this rejection, I will take a quick buy right on this candle, this green candle now that is forming, and my SL will be slightly, below this because I'll be very, very conservative with my SL, right? Then my TP will just be right here. That's 2.65. 2.65 because this is a low probability zone and price may likely break through it. Price may likely break through it. But because of this rejection I'm getting, I'll take a quick scalp here and take my TP right here. But I'm not taking this trade like I told you. So this is a 2.41 risk to reward ratio. So let's see what price, let's see what happens. Let's see what happens. Price has not tapped into our SL yet for this quick scalp. But let's see what happens. Let's see what happens. The moment it moves a few pips away, I'll break even on it quickly. Okay. Oh, good, good. So can you see this? I believe we can see this. The moment it moves in my favor like this, okay, you can see I'm doing all this on the 1 minute time frame because this zone is a very quick scalp zone. You just want to buy in quickly, break even early, then, as soon as price goes some pips to the next 1 minute, what's it called, supply zone, you exit the trade quickly. Don't be too, you know, optimistic about your TP. You go in quickly and you exit quickly. All right. Okay, price is still moving. Let's see what happens. I won't be able to take any more here because of this that I'm doing right now. I just want you guys to see how I, take a quick scalp. You can see what price is doing, right? It's respecting our zone. And of course, we're already on the trade for a quick scalp. And hopefully it hits this next supply level, then I'll exit. But the moment it moves 50%, this is how I measure 50% of my zone. You get your GAN tool, just measure the swing low and where you want to take your TP. This is the 50% level. This level is your 50% level. This one, yes. So the moment it gets to the 50%, I've added a pink horizontal line there. Let me take out the GAN tool, right? Then I will just break even on it. So it's either it takes me out on break even or it goes straight to my TP. Oh no, sorry. It takes me out on break even or it hits my TP. All right, good. So we're already on the 50% level. I believe this is making sense to you all. Already on the 50% level. I can adjust my SL a little to reduce my risk, right? If it crosses above the 50% level, I'll break even completely. Okay, if I'm adjusting my SL, let it still be right at this low. Okay, so okay, good. Now it has crossed above the 50% level. As you can see, I will simply break even on this trade. So it's either it takes me out on BE or it's hit my TP. This is my TP, a very quick scalp, as you can see. So I'm running at zero risk, right? No issues. It can pull back and take my BE. No issues. I'm fine. Okay. And again, the rejections we are getting here is a sign to exit, you know, is a sign to exit, but then it is what it is. Whether it hits the BE or TP, we're fine. So this is just, like a dry run. Okay, come on, price, do what you need to do. Let's move. All right, so we are still on the trade. Price didn't take us on BE. All right, so you can see, okay, price is heading straight to our TP. It's just a quick scalp. But as a matter of fact, depending on the lot size you're using, it has crossed above our 50% mark, right? So you might want to take partials or just allow price to hit your TP straight up. You might want to take partials depending on the lot size you're using. Okay, because a quick scalp like this, where you have your entries right with precision, you want to use a big lot, then you break even early quickly. Okay, go through my YouTube shorts, you see how I flip accounts. Okay, and that is a premium course. If you want to learn how I flip account, you can drop a comment in the chat. You can drop a comment rather. You can drop a comment on this video as a premium value. Teach how I flip account, and I'll be doing more stunts on flipping soon. So just stay with me, stay active on the Telegram, on the Free Signal Telegram channel. And if you want to join our academy, you can join our academy so you can be added to our what's it called, private WhatsApp group where things happen. All right, good. So yes, as you can see, price has actually smashed our take profit. So we are out of this trade. We are out of this trade. Look at it, very simple. Right, we're out of this trade. Don't be too, optimistic. Okay, don't hope. Don't hope. There's no hope here. Of course, prayers answers, but man, you have to face reality. Okay, so that is it. Basically, let's move on to what's it called? To okay, we've marked out our zones, right? We've marked out our zones. That's good. That's good. That's good. That's good. That's good. I believe you learn something from this, setup. A quick scalp, you just exit at the next supply zone. That's it. Don't be hopeful. Okay, so yeah, we've marked, okay, back to our 5H time frame. Back to our 5H time frame. So we have all these zones marked out. Okay, and lastly, let's bring this a little bit closer here and this here. Okay, so we can have our zone marked out. Okay, so this is it. Let's make this looks a little bit more pretty. And this perfect. Okay. This zone has a little fair value cap, right? So this is a zone, yes. It's a zone on the 5H time frame. Is that an FVG? Yes, there is a really tiny FVG. A really tiny FVG. So I'm going to mark this zone. However, I'll take it from this candle. This is also a high probability zone for reversal. So please take note of all these levels I'm marking out. Okay, this is where we expect price to react. I'm going to refine this guy further. Okay, we've not refined our zone further on the 5-minute time frame. Okay, let me do that quickly. All right, so this is it. And this is it right here. And we have this as well. All right, so for this zone, there's a lot of refinement to be done. Let's drill it further to this candle. Look at this candle, this red candle, this one. And that's why we have our FVG, and that's our order block zone. Refine it further to this. Good. And here is our FVG right here. Right here is our FVG. Okay, so leave it at that. That's perfect. That's okay. Let me minimize this. Seems to be very far away from where price is currently. And oh, we have another fantastic zone here. 5H gives us a lot of beautiful zones, right? This very high probability, very high probability zone. So I'll mark this, the red candle. Our FVG, of course, is right here. This is our FVG. Okay, this is our FVG. All right. So we have this guy. We have this. Okay. All right. So we have this. Okay. All right. So we've done this. Let's come down here and mark this. Where's our position to this guy? And SL should be slightly below this. So SL should be slightly below this. Okay, push this to this end. Then we target this level. And take this as the next supply. We can still go all the way to the high. So this is our resistance level. This high is a, yeah. So that is where we can mark this. All right. So that will be our TP. But please, you can take your TP1 here. Okay. You can take your TP1 right here. Take your TP1 right here, please. This is for TP1. This is for TP1. Take your TP1 right here. Then you can let the remaining trades to run. Okay. You can let the remaining trades to run. The same thing applies to this zone. Okay. You can have, let's have this right here. Okay. So again, our SL would be slightly below this low. I'll put it right here. That's where our SL would be, right here, here, straight up. Then our TP would be all the way to this high. But then please take your TP right, take your first TP right, rather TP1 right here. This is our TP1. Is our TP1? Okay. So take it right here at this price level. Now, then you let the remaining to run. Okay. And for this extreme zone here, this extreme zone, which has the highest probability of playing out if price eventually come to the zone, this one, then you can be very, very optimistic with your TP, because when price gets here, fill up the, of course, we're expected to have a reaction right here, an inducement. Then price comes back to tap into this FVG, this tiny FVG that is here. Okay, you can target as much as this. You can target as much as this. You can target as much as this. Coming. See where you can target as much as this right here. Good. Now, when you have that, your SL, again, don't forget your SL would be slightly below this low. Look at this swing level. This is where your SL should be, slightly below this swing level. Can you see it? Slightly below the swing level. So we have our SL. This is a very fantastic setup. It gives us a very little risk and a very substantial, reward. So this is it. This is it. This is our setup for today. Please If you have any question, you can drop it in the chat. I won't be able to take what's it called, any pair, because our time is fast spent because of this trade that we actually took here, that we did a dry run on basically, so I think this is it. I'm going to share this on the Free Signal Telegram channel, as well as the private what's it called, WhatsApp group with the coordinates, so you can set your alert there, your trading view alarm, to alert you as soon as price gets to those levels, so you can execute your trade with precision. Just for the entry models, I have two entry models. I have the risk entry, I have the risk entry, and I have the confirmation entry. Okay, and you know how that works already. For the risk entry, you wait, you just put your pending orders here, right? For the risk entry, you put your pending orders right here at this level. Okay, put your pending orders here and just wait for price to trigger. Just wait for price to get to those levels, and then your broker would automatically execute the trade for you. So for these ones, I'll be taking risk entry for this. For this, I'll be taking risk entry. For this, it will be a confirmation entry because there's another zone close to it. And most often, whenever there are two zones that with close proximity like this, the rear zones or the extreme zone becomes, the point of interest. That's where price would most likely expect. Okay, so for this, it will be a confirmation entry. For these two, it's going to be a risk entry. I'll just put my pending order there and let price tap into it, and we ride the what's it called, with the bullish trend. So that is it, guys, for today. Let me adjust this a little. All right, and this, so it's right. Yeah. Okay, so let's go to the 15-minute time frame to further have this like this. So we have this 7 more. So let's minimize this because these are the extreme zone here. And this. All right, so this is what we have on the 15-minute time frame. So this is an outlook. There's a market outlook for the 5-minute time frame. Please note, I only switched to 15 minutes so you can have a clearer view. Okay, so this is it. This is it. This is it. I'll share this on the Free Signal Telegram channel as well as on my private WhatsApp group for my students. Then we'll monitor the trade. Monitor the trades. Okay. All right, guys. I think this is all for today. Let me check the comment section. Are there questions for me? Break even. So when I say break even, I mean take your trades to your entry point. Move your stop loss to your entry points. That's breaking even. Okay. Move your what's it called, your stop loss to your entry level, so you run at zero risk. That's breaking even. Okay. All right, guys. I think that will be all for today. Okay. Yeah, so I think that wraps it up for today. So today's key lesson, as always, is your structure first, right? You mark out your structure, then you identify key order block zones, and second, and lastly, rather, your entry models, right? Your entry, of course, is where patience, separates, professional traders from gamblers, right? You just have to wait patiently for price to tap into your zone, then you execute without hesitation. All right, guys. So if this session has added value to you, please do not forget to like the stream, subscribe to the channel, and turn on notifications so you never miss our live session. We'll be back again by Monday at 9:00 a.m. West African time. Until then, guys, trade smart, protect your capital, and I'll see you in our next session. Thank you, guys, and peace out.